Hi, everyone, and welcome to the WSBA Crypto Roundup for June 7th, 2024. I'm Josh Klayman, and I'm here with my amazing co-hosts, Ron Quaranta and David Brill. We're excited to be here. And before we begin, and there's a lot to talk about, just wanted to give our standard disclaimers that what we say are our personal views only, and they don't necessarily reflect the views of the WSBA, our employers, anyone else on the planet other than ourselves. Also, nothing that we say is legal advice, investment advice, tax advice, accounting advice, really any kind of advice. But we do think this stuff is interesting and we're happy to share our views. So, with that, Ron, David, welcome.
Josh, good to see you. Everyone on the planet is literally the best disclaimer we've ever had, Josh. So well done. Good to see you both.
Yes.
Great to see you too. So, I have to say, I'm always looking forward to your macro views whenever we do this each week, every time there's an announcement. So, what's going on with the jobs report? What do we know now?
Oh my God. David, I'll start. And I'm pretty sure David and I are going to start a newsletter at some point, just giving our macro perspectives and the overlap with crypto. So David and I were texting this morning for everyone in the audience. And again, thank you everyone for joining and just following up from what Josh said. If you've got comments for Josh or David or I, please put them in the chat. We'll cover them as quickly as we can. So today was jobs report day, Josh, and I think the consensus estimate was that the U.S. would have created 180,000 jobs. And a lot of the estimates we talk about are based on, will the Fed cut interest rates? Are things slowing down? And if the Fed cuts interest rates, then economic activity will pick up. It'll be risk on. People will start buying even more. And of course, the job data came in and it was like a punch in the face. It was 272,000 jobs, almost 100,000 jobs more than anticipated. And for a brief moment, the world blew up. The futures on equities dropped because that means the economy is much, much stronger than everyone thought. And the Fed's definitely not cutting interest rates. So things calmed down a bit. But it goes back to what David and I have talked about. And David, I'd love your perspectives. How valid is that data?
I have a feeling, Ron, you and I could sit in the room and throw darts at a dartboard and put numbers in the different spots, and it would be a close approximation.
Yep.
And while I'm being a little tongue-in-cheek about it, we have these, our best and brightest who come up with these estimates, and they are off by 50, 60% or 40, 50, 60% each time. It's just a little hard to fathom. And so I think the biggest challenge is that every month we have numbers that were reported, and the following month they're like updated or rounded down. And so I think at some point we have to sort of sort this out. But I'm going to connect the dots for everybody about why it matters. So why it matters is, everybody's hoping for a rate cut so that there's cheaper money, there's more liquidity in the system, and then riskier assets become more palatable, and you're borrowing at a lower rate to invest. And as long as the rates stay higher, there's less liquidity in the market. So I think that's why we see these immediate drops, and Bitcoin dropped $1,000. But it's really hard when we have this data that we get every month, and we all sort of uniformly know it's not accurate.
And David, the other thing, just to not to make it a deeper conversation about data than we need to, the devil is in the details of the data, and we can certainly dive into that. Who is getting the jobs? Who is not getting the jobs? And it's certainly not the purview, particularly of this live stream, but are they white collar jobs? Are they blue collar jobs? Are they factory jobs? Are they manufacturing jobs? Are they and looking at the dynamics of that, I don't envy the Bureau of Labor Statistics. It's hard to do that work. David, you and I've chatted about that, but it also makes me wonder, we keep hearing things like data dependent, everything's data dependent. And I do get that. And David, tell me if you disagree. And Josh, I'd love your opinion as well. That makes the marketplace very reactionary. The minute data comes out, and we all know the data might not be accurate, the data will be revised, the data doesn't account for XYZ, the markets still respond in a very reactive way. And I think that's really not beneficial in the long run. But David, again, tell me if you disagree with that.
No, look, I think directionally we need to have a broader plan. And I think every time we react to this data, it's the same thing. We're like, oh, we read it, So we have a higher jobs number, but the unemployment rate went up. Things just don't add up. And then I'm sure if somebody watched our podcast over the last few months, they'd see, we're sort of saying the same things with different words around it, but it's the same themes with different words around it. But I do think ultimately my view is that, we're seeing, and others' view is that we're seeing a lot of service jobs, but we're seeing far fewer white collar jobs. And I think we're also seeing less full-time jobs replaced by more part-time jobs. So I think this is a quantity over quality, and that's the way I've been thinking about it.
And a question for you guys. I mean, since as you noted, the reports are frequently or always seemingly revised after the fact, right? Is there any penalty or any kind of teeth or feet to the fire to get the numbers right in the first place? Or is it just kind of like, okay, here you go, and here's our update?
I'll weigh in, and David, you might know better than I. I don't think there are penalties for the Bureau of Labor Statistics. I will again. I would say I don't envy the job. When BLS started putting out this data many years ago, it was, I'll arguably call it a simpler economy. It was easier to calculate these things. And many people may not realize this 20, 30, 40, 50 years on, it is a much more complicated economy, which means we are looking at tens of millions of different data points. Josh, to that point, all with different lagging indicators, all with different lags in reporting time. I don't think there'd be a benefit for penalties. There's just no easy way to do it. Unless, and I'm going to say it, David, everything gets put on a blockchain, but that's an entirely different conversation.
Another day, another time. But
yeah,
I agree with Ron, Josh. I think that also, look, there are people coming to this country and doing work. Yeah. And we skipping the politics part of it. How do you track that? I don't even know if they're paying taxes. Like, it's not clear if they're paying taxes. So I think it's a big ask. If people are doing jobs who've come here, regardless of how they've come here, and they're not citizens, are they paying tax? How do you accurately track that? I think that's really, really hard.
Yeah.
And speaking of accurately tracking things, one thing I'm trying to segue in an elegant way. I don't know if I actually am. It was announced on Monday that in a bill, the Terrorist Financing Prevention Act, the Intelligence Authorization Act for fiscal year 2025, elements of the Terrorist Financing Prevention Act were inserted. And what does this mean? Some have characterized this as being a new potential law that would grant the US president powers to block certain digital asset transactions. And in fact, if you look at the actual language, it appears to actually expressly refer to digital assets, digital asset protocols, foreign digital asset transaction facilitator, things like that. I've been reading, in fact, from some of our friends at the Wall Street Blockchain Alliance, thoughts that Treasury asked for this, and that this sort of goes hand in hand with what we're seeing in terms of their focus on, their concerns about national security, anti-money laundering, all sorts of things. What are your thoughts about this? Do you guys have any? I know we're all just digesting it and trying to take a look, but
my life has gotten sad. I'm looking at draft legislation over the weekend over a glass of wine, so I'm trying to figure out what that looks like. David, I'll start if I could. I want to give a shout out to David. He was the first person to send us that link and say, "What?" So, David, thank you for sharing that. I mean, and I also want to give a shout out to Dina Ellis and Adam Goldberg. Josh, as we all know, they do our policy update. Dina's been banging this drum for a long time. One of the impediments will be, for reasons that do make sense, national security, anti-terrorist financing measures. I think it falls firmly in that purview. I haven't read the text of it, but for me, a lot of it is tied very specifically to terrorist financing. None of us disagree with that. We want to see those protections. And David, we always get into this kind of conversation around, is it going to be overreach? And how do we even answer that? How do you answer, yes, terrorist financing is bad, the government should do what it can to stop that, with the only way to do that is to, take away everyone's privacy or something? It's a complicated conversation.
I'm a little skeptical when things get slid into bills at the last minute.
Yep.
It feels like if there was consensus on our provision, that it wouldn't get slid into a bill at the last minute, that it would be something that's debated and out in the open. And the fact that this was sort of slid into the bill, and I just happen to stumble across it in the research that I do every day, it's very disconcerting, and the language is very broad. And I again would go back to the fact that I think look, unless the government has sort of insights that are just not shared publicly, it just doesn't feel like it feels like there's a very insignificant amount of terrorist financing that's going on using crypto. Why have your fingerprints on financing on the blockchain for people to eventually trace and track? And I think the government really needs to prove this thesis, because every time they come out with statements, or most of the time the statements are coming out of the administration, they're sort of quoting false numbers or inflated numbers, and they're not very verifiable. So I think the fact that this was slid in and was not really debated and wasn't even well publicized, I really stumbled across it in my research, really makes me skeptical about it, and the way it's going to be utilized.
But to be clear, this is draft legislation, right, Josh? This has not yet been put forward into law, correct?
So it's not law, to my knowledge. I think that it was inserted into what's been characterized as must pass legislation, but isn't yet law. Although, like you guys, I'm catching up, and I have to apologize. I had to turn my video off for a second. For those watching at home and my colleagues on the show, yesterday was the last day of school, and apparently certain of my children must have let the dog out because someone was telling me the dog was in the road. So the dog is now in the house.
Oh God.
I didn't even know the dog had left the house. But, with all this in mind, it makes me think, David and Ron, when you guys talk about having a newsletter, I think it should be called The Crystal Ball, and then underneath it, a whole bunch of disclaimers.
The first page will just be disclaimers, Josh.
Exactly.
Oh,
well, I would say, like, also, when I think of this, to a certain extent, I think back to Tornado Cash, right? And the litigation that it spawned, right? And rightly so. And then how Treasury had to use its 311 powers under the Patriot Act, which it really, to my knowledge, certainly didn't frequently use. I don't know if it ever used, to designate all virtual currency mixers as of primary money laundering concern. And I just wonder whether this is just another step towards that, another lever to avoid having to necessarily bring an action.
I do want to say that I do think that there's some jurisdictions that we sort of block and have on certain lists, on OFAC lists, like North Korea, Iran, and Russia now because of the Ukraine war, that are probably using some of these services.
Yeah.
Iran aside, well, I mean, I guess the question is, are they really using it for terrorist financing? Or are they using it to get around the blocks on the U.S. banking system? So I do want to say, I do think some of those are legitimate, reasons, but I don't think that far and wide they're being used to fund terrorism. I'm trying to draw a distinction there between the two.
And to follow up on that, David, to your point, again, the federal government in the United States and other governments, they've been using forensic tools to track this for years. So again, we get the sentiment of protecting against terrorist financing and protecting against sanctions avoidance. We totally get that. But this is not new territory for Treasury. This is not new territory for regulatory and law enforcement agencies. So again, to your point, seeing this slipped into last minute legislation is why, unless there's data you're not able to share that shows there's a real problem.
Yeah.
More to come. We can't hear you, Josh.
Can't hear you now, Josh.
Everything at once, right? So I have to wonder whether this is anticipation of potential attacks from hostile actors or something like that.
Oh, interesting.
Right? As opposed to saying this is going on now, we need to stop it, having it. I just wonder, because I've seen a lot of that with, for example, the concerns about AI, right? And generative AI and deep fakes and things like that. I just wonder whether this may be something like a a tool. But I have seen in commentary, there's an article, I think actually one of you may have flagged it, where it's from Cointelegraph. It says new law grants U.S. president power to block digital asset access. Of course, the caveats that we said before about it not actually, to our knowledge, being law yet. One of the things that it suggests in this article, it says, it's referring to someone named Johnson. It says Johnson's analysis suggests that the law's broad applicability could compel users to join Know Your Customer, KYC compliant, and permissioned blockchain networks, ultimately limiting them to regulated blockchains.
Yeah.
So, yeah, I guess time will tell.
There's just one final thought, if I could, Josh, and David, you and I've had this conversation before. It's very easy to get sucked into the clickbait of the headlines that say the latest draft legislation is going to kill crypto. And I would caution colleagues in the space, read into the details where you can, because I think that's an important part of the analysis. The clickbait is prolific in the world today.
Absolutely. One other thing I just wanted to mention that I saw headlines about just, I think yesterday, if I'm remembering correctly, we've heard recently about Robinhood and how it announced the Wells notice that it had received. And also its pretty strong statements about how it had attempted to become, I believe, a special purpose broker dealer, right? And actually had engaged in many conversations with the SEC. I just thought it was a really interesting and heartening announcement that evidently Robinhood is going to acquire Bitstamp.
Yep.
And I think, that appears to show a real doubling down or a real commitment to the digital asset space.
It was interesting to see the deal too, Josh, which was, I could be wrong, $200 million all cash. So the three of us remember talking about Robinhood, not too long ago, and it was the business model is broken. They're not making enough money. Suddenly they've got almost $250 million to buy an international, an overseas exchange. And David, the interesting part for me is this is also a bit of forward-looking. I would almost call it forward-looking guidance on Robinhood's part. You don't make these kind of investments unless you think you're going to win in the long term, in my mind. And I could be wrong. I could be overestimating that. But to me, it is a kind of a positive signal of their own on the future of the business.
I think there's a couple of interesting things with this deal. One of the things that really caught my eye was the price tag. I thought $200 million, $200 million seemed very low to me, considering what other exchanges are valued at in the U.S. I mean, Bitstamp is in Coinbase, but Coinbase is, has a valuation in the low $60 billion range, and Bitstamp sold for $200 million. I would imagine, Kraken, when it goes to market, will have, a significant market cap. And so why the market cap was so low is really interesting to me. I'm going to flip the coin a little bit on you, Ron, and say that I think Robinhood sees the value of crypto, as a lever to raise earnings going forward. But I think they also see the value of doing it outside the U.S. Yeah, and so I kind of view this as a double-edged sword, because I think Robinhood sees the value in being part of the crypto ecosystem and broadening their offerings, but they also see the value right now outside the U.S.
Yeah, fair point. And Josh, for the record, you and I know that David will not look at a deal unless it's 400 million or above. So just to level set for our friends in the audience.
But all joking aside, and that's definitely not true, but all joking aside, we've talked about in the podcast that we're seeing like a pickup in M&A, a pickup of, interests of different parties in either buying or partnering. And so this is just another example of that. And I think we're going to see a lot more of this, going forward. Some of it's going to be stealthy until it's actually announced. But I think we're seeing a number of TradFi companies and other companies kick the tires on whether it's exchanges, protocols, or, all the different parts of the ecosystem. And I think especially in infrastructure.
Yeah. Josh, can I raise a separate topic? I don't know if we covered it last week because it's all becoming a blur and it's too much caffeine in my life. But if I recall on our last live stream, David, Josh, we were talking about the potential veto of SAB 121. And of course, just in time for Friday Night Pizza President Biden vetoed the bipartisan resolution to rescind SAB 121. I will publicly announce for all of our friends in the audience that I lost my wager to David that the SEC would rescind or repeal SAB 121. But again, we're in a politics season, David. I'd love your thoughts post that kind of veto.
So, I mean, first of all, we could do a whole afternoon on politics, but
we sometimes do.
I hear different things, but as I connect the dots, it feels like to me that once the president came out and said that he was going to veto it, he wasn't prepared, or the administration wasn't prepared to walk it back. I don't know if they felt they would look in a weaker position by, changing their tune on it. I do think that they could have just not acted on it, and it wouldn't have been like a full retreat. But it feels like they didn't want to go back on what they had said. And then I think the other thing is, again, and I want to keep this just on crypto, so I'm not talking about the broader political environment, but I think, the way Trump has positioned himself vis-a-vis crypto put the administration on the defensive, both as, how to respond to it, and also that it would feel like their positions may be out of tune with at least the crypto population. And so I think there needed to be a recalibration, and I just think that they missed a good opportunity to recalibrate.
I mean, can I jump in for a second?
Yeah, go for it.
So I don't think you fully lost, Ron. I think you only partially lost, because I think, one of the things we saw come out was that Commissioner Ueda expressed, that SAB 121 should be withdrawn, in so many words, right? And said that it was unfortunate that President Biden vetoed House Resolution 109. And so it's really interesting because now we have Commissioner Ueda, right? We have Commissioner Peirce, who had already previously spoken. So, that's two of the commissioners, granted, not enough to repeal, but clearly it's a divided house, so to speak, over at the commission. And I will say, I do think it's still possible that because of all this pressure, that the SEC could reintroduce a different version, right? I also had read about a House appropriation bill that is now being potentially could be used to prevent the SEC from implementing SAB 121. It was, I'm looking at an article right now, actually, called House Appropriation Bill Targets SEC's Controversial SAB 121 Amid Budget Talks. And it says, it says Fox Business reporter Eleanor Terrett, who reported the news on June 4th, said the bill will prohibit the SEC from using appropriated funds to implement the rule. Appropriations allow agencies to incur obligations and make payments from the U.S. Treasury for set purposes. And so one policy writer in the budget, and then I'll stop reading, says, quote, prohibits the SEC from implementing or enforcing Staff Accounting Bulletin number 121, which implements harmful digital asset requirements. So it's unclear whether this budget will succeed in its current form, but certainly people haven't given up the fight.
Yeah. And to that point, Josh, if I remember the conversation you and I had a few days ago, a veto would have removed SAB 121. Now the SEC at least has an opportunity to amend it, to your point. So I don't know what the wager was, but I suspect Dave and I can split the very expensive bottle of Chianti we were talking about.
Look, the other thing I want to mention and reiterate is that the GAO said that this bill was, improperly put together and approved. And so I think it's a little frustrating that when you have one agency saying the process wasn't followed, then you have a bipartisan support to repeal it, and yet, the administration still vetoed it. So I think, whereas other parts of the crypto ecosystem, I think, are up for broader debate. I mean, obviously we're pro the industry. I think this one, that just the administration ends up being on the wrong side of this, and it's unfortunate. And the other thing that I've heard from a number of people is that their veto of this and sort of their positioning leaves a lot of people skeptical that there's really been a mood change in the administration on crypto.
Yeah, I mean, and it certainly doesn't for those who are hoping or may be predicting that perhaps the administration might have felt differently from Chair Gensler, it doesn't appear that there is any space between that, at least as far as SAB 121 is concerned. And I will say, to David's point, Commissioner Ueda, when he was discussing the veto by President Biden, reportedly added that the SEC's decision to introduce SAB 121 through a regulatory edict bypassed rulemaking under the APA, thereby, quote, undercutting our system of checks and balances against an overreaching administrative state. So it's really it's interesting that there is no hide the ball on this. We all know what the GAO said. Yeah. We all see what Congress is doing. We all, it's kind of like a blockchain, right? We see everything that's happening. And yet somehow SAB 121 appears to be continuing on, at least for now.
This has always been an education for me, Josh, in politics underlies everything in DC. And I get that. And I don't mean to make a joke of it, but there are political operations happening in the background, I'm sure. Like it's election silly season, right? We have absolutely no idea what conversations are happening in the background, and it'll probably be this way at least through November.
It actually scares me a little bit.
Politics?
I'm kind of concerned about like what's going to come between now and November in terms of I guess one could say, well, it's a hopeful time. We're going to see some positive movement. I just, like you said, so much of it is positioning.
Yep.
And it's really interesting. It's an interesting time, but I guess every time is an interesting time.
Yeah. You know what, Josh? I really agree. I think this is one of these elections where I think it feels like it's so close that it feels like, I don't want to sound too cynical, but it almost feels like whatever polls well in the next few months will be positions taken by the presidential candidates, whether they, are full-throated or not, just to sort of win the election. And I think there's some positions that are being taken now, and I think we'll see more of this, that a little bit you're going to scratch your head and you're going to wonder, well, why are they positioning themselves this way? And I think it's going to be because there's these wedge issues, and crypto is definitely one of them. And I think they're reacting to it. And so I think it's a little dangerous. Mm-hmm. And I also think it makes, for our industry, it makes the point that we have to be super vigilant in what's going on so that we don't get caught by surprise by something that gets dropped into a must pass or something that we don't have visibility on that may be harmful to the industry way past the election.
And I'll also say, David, to follow up on that, this also puts to rest, in my mind, hopefully, finally, the lie that the crypto ecosystem doesn't have enough people involved to matter, right? And, we were all texting about this, I think it was earlier this week. Elections like this, like every election just seems to be closer and closer margins, right? And this election will be decided at the margins. So when you're looking at the crypto ecosystem, the people interested in, I know there are a lot of PACs now that are getting a lot of money to kind of push for crypto-friendly candidates. They matter. Sub 1% vote blocks matter in this election. So it'll be interesting to see what happens in November.
You're seeing a lot of money go into them too. And, we all know, in these elections and running campaigns that matters. And I think that it's so interesting because at its core, I still think there are a lot of libertarians in crypto. And, a lot of people want reasonable legislation, but kind of would prefer more of a hands-off approach. But I think people have pivoted to the fact that if you don't get involved in the process, that, you're not going to have a say in it. And so I think there's been a mind shift that people need to be involved, need to be heard, and need to donate to advocate for their positions.
Yeah. So just shifting gears slightly, if that's okay.
Yeah.
One of the other things, we've talked a lot about in the past weeks is about the potential spot Ether ETF. And I had seen that in the past, I don't know, 16, 15 hours, something like that, Chair Gensler had given some sort of statement that the timing of a spot Ether ETF depends on the issuers and not on the SEC. And there was actually a post by Alexander Grieve linking to CNBC's Squawk Box this morning. And he noted the pivot, as he described it, from the quote, all tokens are securities, end quote, to quote, tokens lack proper disclosure. So I think it's really interesting. And in that respect, I mean, yeah, I mean, if it's about disclosure, we can do disclosure.
Yeah. To me, a little bit of it is Josh, and I had seen that article too, and I had actually also seen, again, this is not beating up on Chair Gensler. We all have our particular opinions. I think he gave a speech, I forgot what the event was, where someone had raised spot Ether ETFs, and his response, someone quoted it as, well, kind of a shoulder shrug of, well, ETH ETF, ETH futures have been trading for a long time, so it probably makes sense. I remember the conversations around spot Bitcoin ETF where Bitcoin futures were the bone of contention. So this kind of kabuki theater of, oh, it's okay now, let's talk about disclosures. This just points out to that lack of clarity. It's just muddying all the waters to me. David, tell me I'm wrong or I'm too cynical on a Friday.
No, I think you're right. I think all I can do is sigh. But
deep breath when I have
I'm
these
going to
conversations.
share some, I think, positive knock-on effects of this. So one of the things we've seen is a lot of inflows into the Bitcoin ETF this week. And I think that with the Ether ETF, with the Rule 19b4 being approved and an S1 likely being approved shortly, we'll decide what shortly is amongst ourselves, that I think that might have been the tipping point to give institutions that wanted to invest and have been doing due diligence on it, it might have just tipped them over to the other side where they're now comfortable and they're starting to invest. So I'm going to be the Wall Street Blockchain Alliance mug half full and say that that is the benefit to the ETH ETF being approved. And then again, I think for people who want to be involved in the ecosystem and want to do it in a traditional securities wrapper rather than on a crypto exchange, this is again beneficial. So I don't think the administration's intentions have changed. I don't think the regulatory view has changed in the administration, but there are some positive knock-on effects for the Ethereum ETF being in the process of going to market.
Josh, I just want to point out real quickly, I appreciate David showing the WSBA swag. My wife confiscated my mug for her own use. So I'm hoping to replace that soon. David, I agree with you. It'll be interesting to see where it goes. But if I could bolt on one follow-on to that, as we see the playbook of spot ETH ETFs, potentially moving forward, David, one of the things I had seen was Franklin Templeton. There's an article around the idea that Franklin Templeton will weigh in with a fund on quote unquote other crypto, and I'm paraphrasing that. And I don't necessarily mean meme coins per se or meme tokens, but this kind of fulfills some of my hypothesis in the long term, which is Wall Street, TradFi will eat crypto because that's where the long-term strategy is. Did you get that from the Franklin Templeton article, David?
Well, I mean, look, I think that they want in, and it makes sense. I would like to see these different type of offerings for customers. I'd also like to see them on crypto exchanges being offered as well.
Yeah.
I just think that the regulatory uncertainty here makes it difficult to see in the short term those kind of products being offered. I mean, I think people would like to buy a basket of maybe the top 10 crypto assets. I mean, I think a lot of people would want to buy those, but right now I don't think you can really go to market with those. And it'd be nice to see crypto exchanges being able to offer them, but I don't think they can offer those right now. So, do I think that's the future? Yes. I think we all agree what TradFi wants in, but I think in our current regulatory environment, that seems a fair distance away right now. Besides accredited investors getting access to that through special funds.
Is that what the wirehouses are waiting for, David? I just feel like they're being held back, and I'm not sure why.
I think that's a great question. I'm going to stay with my thesis that now that the Ether ETF is, the rule's been approved, And I think the S1s will be approved again. I was hoping end of June, maybe it's the end of the summer. It feels like that should be the tipping point for those wirehouses to get across the line with the Bitcoin ETF, knowing that another ETF's been approved.
Right.
What do you think, Josh?
Yeah.
I mean, I think, first of all, just if we stay with Franklin Templeton for a moment, I mean, it's really remarkable what a change, what a shift in strategy and perspective we've seen with that. I know, there are lots of folks focused, on digital assets, including, Greg Scanlon and others at Franklin Templeton. I just think, having such a massive institution really pivot in a very big way towards crypto, I think it's remarkable. Whether we see just more broadly, I know there's been a lot of discussions about whether there would be ETFs of other digital assets. I think would be great to see. I don't know how that plays out with some of the litigations that are going on right now. I also think there was something else I was going to say. You know what? It slipped my mind because I heard someone coughing.
I got to follow on that, Josh, because you mentioned the word litigation, and I was thinking of you and David the other day. I think about my colleagues every day, folks, for everyone in the audience. But that being said, the litigation stuff that we've spent so many years talking about, Josh, it just seems to have been very quiet the past couple of weeks. Am I not reading all the news? What are you seeing from the litigation perspective?
I don't think that you're not seeing the news, Ron. I just think the path of litigation in general, it takes a long time for things to get resolved.
Yep.
So we could just be in the middle of motions being filed, discovery, and things of that nature. We also don't know what's going on behind the scenes with with protocols receiving subpoenas, Wells notices, and those of the like. So I think things could be kind of chugging along behind closed doors. I just think that the big crypto parties who are litigants are really evaluating what's being said in the marketplace, what's being done. And so I think people are maybe a little heads down, recalibrating their strategy. Yeah. But I also think, and this is going to be the hopeful side of me, that perhaps being very loud about regulatory actions absent fraud is not something that is palatable in this election cycle. And perhaps that is going to be quieter the next few months because it's not in line with, some of the voting blocks. So I don't know. My crystal ball, has been pretty good on these things, but that's one thing that's still sort of a little cloudy because there's so much that goes on behind the scenes that we hear about in bits and pieces, but we don't know exactly what's going on behind the scenes.
Yeah, I mean, may I jump in on this?
Yeah.
I mean, I think we also have to remember the SEC is in a defense posture with respect to certain of the litigation. So we don't know what's happening there. Right. And I think also knowing about the Wells notices that recently were announced, I mean, who knows what's happening behind the scenes? That being said, I tend to agree with what David just hypothesized about maybe not wanting to have a splashy news cycle at this point, with what appears to be a quite close election coming up. But I do think, and this goes to a question I had for you guys. This is the thing I forgot before, which is, is it possible that, as a result of, or I suppose anything's possible, but what do you think of this possible idea? Could it be that as a result of that very awkward situation with the Biden administration having to go through with a veto and something quite unpopular, and the messaging that we also saw about, finding paths forward with respect to some of I believe it was the Fit 21 passage, and then also with suddenly saying, get in your, we saw the rule change for the spot ether ETF, and then saying, get your S1s in by Friday.
Yeah.
Well, could this be, I mean, in addition to maybe being a bit quieter about litigation moves or enforcement moves, but could it also be that maybe someone spoke with Gary Gensler and said, maybe take a softer tone And maybe that's what we're seeing in this interview, saying it's up to the issuers. It's really about disclosure. I wonder.
I would leave that to the smart political minds that all three of us know, but I would not doubt it. I mean, also, Josh, to build on that one last point, to your comment, the SEC has gotten pretty beaten up generally, and I'm thinking about the news this week of the follow up to the debt box case. They were sanctioned and had to pay something over $1 million for legal fees for the defendant, and the SEC, if I recall correctly, shut down their Salt Lake City office. And again, I don't even know how big an office that is, but that's kind of a retreat given the beat up they've gotten recently. It's not an easy time for them.
Our colleague,
Gottlieb. Yeah,
yes,
sorry.
I was about to say that, Josh, but no, we can say it in unison. All right, credit to our colleague Jason Gottlieb, who in two fell swoops has taken $2 million from the SEC back to his client, and then them closing their office. Again, the closing the office part's a whole nother issue. But
yeah, of course.
Look, I want to pick up on something that you said, Ron. The Robinhood Wells notice is a very bad, story for, I think, the commission and for the administration. Yeah. An issue, a company in good faith employs a lot of U.S. people, tried to, work with the commission, and still ended up in a place with a Wells notice after, I think it was 18 months, and they well documented all their conversations.
Yeah.
It's just not. That doesn't feel good to this group, to our cohort, to see all of that, to see the effort go in, and also to see all the money that clients of ours, colleagues of ours have put into regulatory, sort of trying to figure out where the tea leaves are, legal fees, and it's been a real struggle for them. And I think the Robinhood story in some ways crystallizes that. And I think it's a narrative that is not something that the administration wants to be tied to with this election.
Yeah, Josh, David's comment reminds me earlier this week. The parallels of. We did a webinar on Wednesday. So you want to be a special purpose broker dealer, and Josh, you and I and the panelists, we've talked about this kind of history of firms with capital and employees trying to comply, going into regulators and basically being slow crawled and then being told nope. And so again, to your point, David, there's this. We don't know all of the conversation behind the scenes, but there seems to be this overarching. And Josh, I'm going to say it. We said it too much on Wednesday. Come in and register, right? And we see that story over and over with it just not going anywhere. So what are these organizations supposed to do?
Oh,
you're on mute again.
I guess now it's come in and disclose.
Come in and disclose. Yes. Oh my goodness. And to shout out to Sonia for her comment. We did talk about the Robinhood acquisition, and yes, there's Coinbase competition now. Again, Sonia, you missed it. David thought it was a cheap deal. I think Robinhood's been very strategic.
Well, I think it was a strategic deal, Ron. I just was very surprised at the purchase price.
I was surprised about the purchase price too.
Josh's deal flow is 500 million or above for everyone else in the audience as well. I had to do it, Josh.
Doesn't do middle market. She's only, only with a B at the end of it do those deals come into her. The other ones just go to the other people in her group.
She's going to kill us both, David. You know that, right?
Well, I want to pivot for a minute and stay on a lighthearted tone and talk about, meme coins, and also the fact that, GameStop is now, back in the flow. And Roaring Kitty, I was reading before our podcast, there were over 120,000 people who signed up for his YouTube before it even started this morning. And it's probably even higher because I only looked at it at a point in time. But, one of the things that I look at is, if we see this run up in sort of meme stocks and a lot of volume in meme stocks again, are we going to see, more liquidity come into crypto, and maybe not into the part of crypto that we, focus on, but maybe in the sort of meme coin part of crypto. So that's something I've been looking at, and I will admit, I will watch his his YouTube at some point over the weekend and see what he has to say.
David, I I agree with you. I'll probably watch it. I always worry about casino mentality again. And when we saw this person pop up again, it was interesting to see the market reaction. It was much more exuberant in 2021 or 2020. I'm losing track. Then it seemed a bit more muted. I mean, it's gotten a lot of attention, certainly. I'm just worried about this kind of chaos of retail investors piling in, just hoping to get rich quick. And I get the impulse, and I respect it and I understand it. But you and I do a lot of this kind of research. I've started to see the posts of, Sonia will laugh at this. Shiba Inu is going to go up 147,000% in the next 2 years, and these are things people see and they become an emotional attachment, and that ends badly for a lot of investors in this space. I don't want to sound overly or too cautious, but to everyone out there, just be careful. Know what you're buying, because if you think you're going to be the person getting out on top, odds are, and David, you and I were joking about this, talking about Nvidia, odds are you won't. And just be careful out there when you see this kind of mania.
I also think that Roaring Kitty is Keith Gill, by the way. Just to give him
Thank you.
credit. Just remember, like when you enter into a position, are you somebody's exit liquidity, or are you buying liquidity? And there's a really different sort of view of that. And so I think it's just something to be really mindful of. Also, the other thing is, I think it's great that people have platforms to talk about things that are important to them.
Yeah.
And I give them credit for having this big following, but I am a little circumspect about the whole casino mentality around it. And I do have concerns that people are going to allocate money, in a way that maybe not as thoughtful as they might usually do it.
Yeah. And the knock-on effect of that, Josh, the three of us have spoken about this with the working groups as well, that always imputes to the larger crypto and blockchain world. When things go south and market prices tumble on some of these things, the politicians are the first ones to say, see, this is all bad. And it kind of paints with a very broad brush, which is a little concerning.
Go ahead, Josh.
I was just going to say, not that these things are related in any way to what went before, but I do think that for the general public, hearing headlines of Robinhood and hearing headlines of GameStop, obviously this is a very different situation, but I think just it harkens back to what we saw in the past in many people's minds.
The one thing I will add is that, we need to remember that a lot of prominent investors talk about their positions. They say, I have a position in X, and explain why they have a position in X. And I don't mean X, as
Twitter,
but just a position in a certain stock or a certain token. So I'm not caught up in that part of it, because that's a common practice.
Yeah.
And I think people talking their book is very common. So I don't think we should malign it on that. I just think that people just need to be careful about what they're doing, and try not to be emotional about it, and sort of chasing. Look, it's up to people what they want to do with their finances, and it's even really not our place in some ways to tell people or suggest to people what to do. I'm a little concerned that people just get caught up in the frenzy and maybe haven't thought about the choices that they're making as well as they may have.
Well said. You're on mute.
It looks like, sorry guys, it looks like there's a quote posted by Jamie Arroyo Jr. saying, quote, please note that there's a registration fee required to apply. However, payment of this fee does not guarantee acceptance, as all applications are subject to review and approval. End quote.
Is he talking about the S1s, or is he talking about something else?
I'm not sure. I saw this pop up, I think, as you guys were just discussing GameStop and things like that. But Jamie, if you're out there listening, let us know.
Maybe he was talking about the coming in and registering, and that you pay the fee. No guarantee you get the approval. That's what I'm gonna.
Okay, but they could at least guarantee a conversation. How's that? Sorry, Jamie. Good point, though.
I mean, just you have to be careful that the conversation isn't. Jamie said the S1. Yeah. Yes. Okay. We just have to be careful that the conversation doesn't pivot to another group in the commission that you might not necessarily want to have that conversation.
Fair point. David, I wanted to ask, and I know we're approaching pretty much an hour on a lot of these broadcasts because I could talk to you both for all day long. I'm going to take out the magic 8 ball that the three of us probably remember, but I saw something interesting. Someone made a prediction. I'm probably messing this up. I think it was Mike Novogratz. I could be wrong. Apologies if I am wrong. Predicting 100K BTC by the end of the year on the back of ETH approvals for spot ETF and just more institutional money coming in. My magic 8 ball says, yes, it is likely, David. I'd love to hear what you and Josh think.
Hmm. So I've always looked at like the 90 to 100 range this year that we would tag that at some point.
Mm-hmm.
And I think the question is, do we sort of get to that range and do we have a sell-off from there, or do we get to that range and consolidate a little bit and go forward? So my kind of view is that if the wirehouses start approving, allowing their customers to invest, I think that's one, potential pathway to get there. I also think that, on the other side of that is, I don't think we see a rate cut until September and maybe not till November. So my crystal ball sort of says we push through the all-time high, and then we see a rush up to maybe 80, 85, and then we sort of sit there for a little while and see where we go. But I do think if all the wirehouses just flipped the switch and that liquidity came in, I think we could. I agree with Mike that I think we could tap 100 at one point, but I'm sort of in that 90 to 100 range right now.
Josh, here's my next wager with David. Sorry, I just got to throw this in. We just lost Josh.
We
David,
lost
I'm gonna throw out one wager for you.
Mm.
You mentioned a rate cut in September and or maybe November. I'm going to disagree with you, buddy. I don't know what we're wagering on this. I think there are no rate cuts until December. And
Wow.
one of the reasons I say that is if you look at the history behind Fed rate cuts, particularly in election years, politics aside, they try not to be part of the election cycle. They generally never, if I remember my history correctly, they generally never lower interest rates just prior to an election or raise interest rates just prior to an election. I could be wrong. Someone out there that might know economic history better than I do, please let me know. But I think if the Fed moves, barring any major changes in the economic data, David, only one and in December.
I think we'll say to be continued on that prop bet. I'm going to mull that over a little bit. Let's see what the CPI data says on Wednesday, and then I'm going to revisit that with you. But I think that's a good point, though. But I feel like there's still one. We did have Canada and Europe lower their rates.
Yep.
So I still feel like there's one in the tank.
Yep.
But depending on how the data comes out, it might be really difficult.
It looks like Josh's dog ate her computer, so I think we've got her back on phone. Hey, Josh.
Hi, it was the magic 8 ball. The outlook was very bad.
David and I were just talking about predicting interest rates. David, one other thing. Next week, we get the Fed decision on the next interest rate changes. I believe Wednesday or Thursday. I could be wrong, but that'll be something for us to talk about next week as well.
Well, I will tell you this. I'll be shocked if they cut rates this month based on this number.
Whether or not it's right or wrong, right?
Yeah, regardless of CPI, I would be really, really surprised if we saw that. But stranger things have happened. But I don't think anybody really sees a cut before September. We were just saying, Josh, that Europe lowered rates, Canada lowered rates, and Ron and I are going back and forth on whether we'll see one rate cut before the election.
I keep trying to outdo David's magic crystal ball, Josh, and I never get there.
Yeah, but Ron, you're making really bold predictions. I feel like that's the thing. Like you're swinging big,
and missing, kind of, but that's okay. We'll get there. I just need the one home run, Josh, and it's a good dinner for me from David.
I think it's great.
So what are you going to be focused on this weekend, Josh?
Just catching up, as always, on everything that happened this week, including that proposed law or proposed bill that we discussed. Really delving into it and understanding more sort of where it is and what's going on with it. But yeah, I mean, pretty much that. As I mentioned, my kid's last day of school was yesterday, so I think there will be a lot of swimming in the backyard in my future as I sit there with the laptop. So, what about you guys? What are you doing? Anything fun and exciting?
David, you go first, buddy.
You know, I have a fun weekend planned. There's a place called the Classic Car Club in New York City. So I'm going to an event there tonight. So that's a lot of fun. And my daughter recently had a birthday, so I had dinner with her last night, which was really fun. So
Very nice.
looking forward to doing some reading and spending a little quality time and catching up. You know, Consensus was interesting this year. Had a lot of good conversations. So sort of catching up on the work side of things after spending time in Austin, and then I was in Orlando for a work conference.
So I will be doing something less glamorous. I'm going to shill for the book again, Read, Write, Own by Chris Dixon. We should just try to get him on the webcast. He's a VC out on the West Coast, and I keep shilling for the book. I'm not getting a commission, Josh, I swear. But it's a good enough book that lays the foundations of what decentralization truly means and how we got here. So my goal is to finish that this week. And in July, I will be in Nashville with our friends at Bitwave. There's an electronic digital asset summit in July. David, you and I have had this conversation. I got to book my airline and hotel this week. And why are hotels so expensive? I just don't understand. I will be pondering that and the future of Shiba that Sonia will appreciate as well.
I thought you were just waiting for the Doge ETF S1 to get out.
Yeah, I'm waiting for Elon's latest comments on Doge to the moon and see what happens with SpaceX. But Josh is shaking her head at us.
Funding secured.
Funding secured. Yes. Wow. Good one, Josh. Should we leave it there, my friends?
Yes.
It is great to see you both. Josh, thank you so much. David, as always, good to see you both. For anyone who had additional questions for David or Josh or I, please email us info@wsba.co. Thank you all for joining. We will be back next week. Have a great weekend, everyone. Bye-bye.
Take care.